Hey, what's going on, everybody? It is Aaron Trevino here, and we have another wonderful guest from Los Angeles, California. We have Jonathan. How you doing, Jonathan?
I'm good. How are you, Aaron?
I can't complain. The weather's a little better today than it was last week.
Yeah, especially being in Texas. I get that for sure.
Yeah, absolutely, Jonathan. I mean, it's great to connect with you and have you on the show. So for those of us who aren't familiar with you, would you introduce yourself?
Yeah, my name is Jonathan Barr with JB2 Investments. My brother is my partner. Grew up in a family real estate business. And I joined the family business after the last recession because I graduated college and couldn't find a job. And my mom basically said, come work for us reluctantly because who wants to work for their parents? But they were also kind of rebuilding the business because they took a hit during the last recession. So I came back to kind of use a little bit of what I learned in college to implement some systems and kind of help them rebuild things. And we went to the foreclosure auctions, REOs, short sales. We were buying 7, 8 homes at one point at the height of the REO debacle. And we bought about 400 deals in about a 10-year period. Also did some ground up, some development, townhouse style development, 6 to 12 units. And we also had a small portfolio of like 30, 40 units in the LA area that I rented out and leased myself and dealt with rent control. Part of the reason why I'm not in LA at this time. And then in November of 2019, bought my first multifamily out of state in Kansas City. And then about 5 months ago, about a 72 unit in Norman, Oklahoma, which is within the metro of OKC. Um, and we're trying to keep that going and see where it goes from there. It's been definitely a tough market right now. People are pretending like COVID doesn't exist anymore. So it's interesting times for sure.
Yeah, absolutely, Jonathan. It kind of seems like you have a bit of experience in a lot of different things, just kind of, starting out in the industry to, to kind of buying those distressed properties to development, and you've kind of run the gamut.
Yeah, I've been in the trenches for sure.
Yeah, absolutely.
I've jumped through windows to get into houses right before they're about to go to auction to see if we can get a inside shot into the property. Vacant properties. I didn't break into properties where people are in there, of course. But yeah,
Yeah, yeah, absolutely, Jonathan. I'm just curious as well. I mean, growing up, did you grow up in LA?
I did. Yeah, I'm born and raised in LA. Went to school at San Diego State. I did live in Mexico for 6 months in eighth grade. That's the only other time I lived outside of LA.
Okay, very good. Was
Yeah.
that like parents on business related, or?
And my mom is from Culiacan, Sinaloa, which is kind of like the middle of Mexico. And so I just moved down there with my uncle for like a semester, went to school there. Their education system is actually really good. I actually was advanced coming back to the US after being in Mexico, which is surprising, right?
Wow, how about that? No, that's pretty neat.
Yeah. Uh-huh.
I'm curious. When you were growing up, did you kind of have an idea that you wanted to work in real estate, or was there any particular moment that you had that you wanted to get into the industry?
Um, Honestly, like growing up, I never wanted to be in real estate just because I saw how hard my not to say I don't want to work hard, but like I felt like they were not as around as much as I would have liked, you know? But and that's kind of why we're trying to do what we're doing now with the longer term, more because flipping is more of a job than what we're doing now. I mean, we're working hard and we're doing a lot, and it's keeping us busy. But it's more of a long term play. It's more of a quality of life thing. It's more of a make your own choices and structure your life in the way that's going to work best for you and your family.
Yeah, no, you brought up an interesting point, Jonathan, about about the flips. Is that a lot of people will maybe quit a job and go into the flips, but it almost you're kind of making it sound like taking on that flip is in itself kind of a job.
It is. I mean, First of all, finding a deal, especially in LA right now, is like damn near impossible. So that part, I mean, you got to look at 100 houses before you find a house that actually makes sense. So, you spend, you know, a couple weeks just to find a deal basically in today's market that works. And then you have to manage the project, and we're also doing higher end stuff. So we're gutting the projects. There's surprises. You have to go to the projects at least a couple times a week. And we're also the broker. So we facilitated the whole sales. So that we were wearing a lot of hats and doing a lot of work just to get like one deal through the whole pipeline.
Yeah, absolutely. I'm
But we
sure.
learned a lot.
Yeah, no, I'm curious as well. I mean, I know you kind of mentioned how, you had those learning experiences, those surprises, those flips. If you don't mind sharing, I mean, what was your first deal like?
Yeah, uh, so I'll talk about the first deal that I bought and sold. This was from the foreclosure auctions. It was in probably the summer of 2009, I would say. And the funny thing is that no, we only had like one other bidder on the property because they thought it was a condo, because the way the description of the address was read, it kind of seemed like a condo. It was also only like 600 square feet, the house. So it kind of had that, and on a small lot. So it kind of just had that whole feel of being a condo, but it was still a house on its own lot. And so we only had one other bidder. And the only reason we had another bidder is because my stepdad that had them repeat the address. And then like one other person like realized what was going on, and I ended up bidding it. So bid up a little bit. And it was already vacant. So we bought that for 145,000. We went there and we basically painted it and fixed a few things, probably put like 10 grand, and sold it for 306,000 in 36 days after purchasing it. So the ROI on that was insane.
That's a pretty nice deal for the first time, huh?
Yeah. I mean, you don't come across deals like that anymore. Those times are crazy times where like deals are falling on your lap left and right. But so yeah, I was spoiled a little bit in the beginning, I guess you could say.
Okay, fair enough. Now, so it kind of sounds like you kind of got your feet wet, doing those flips. After the flips, was there any moment that you realized you wanted to transition into new construction or into other parts of real estate?
I think around like 2013, 2014, the flip business started getting a little more challenging. And I saw that in LA in particular, there's a small lot subdivision ordinance, which allows you to subdivide like a, a, a lot that's even not that big into like smaller lots. So like 15 to 2,000 square foot lots to build townhouses, which are considered single family homes, but they look like townhouses. They have a shared driveway, but they each own their own separate lot and property. And so the beauty in that is you could sell them separately as kind of townhouse condos, but they're a little better than townhouse condos. So they have a little bit more of a premium. Um, but the thing about that process is the entitlement process of subdivision, recording a map, going through the neighborhood council. It was also in a historical zone. So going through the historical council and getting it through to actually get a shovel in the ground took at least 5-6 years to get to that point.
5 or 6 years.
Yeah, in LA.
Huh. Yeah, no, I'm curious as well, because I'm personally not familiar with, California real estate. People kind of say the market's tight, the market can be hard to find those flips, like you said. Could you maybe explain a few of the challenges of trying to do real estate deals in California?
I mean, it's simple economics, low inventory, a lot more competition. I think all the shows and everything out there that talk about flipping and all the seminars and everything. And so you have all these people coming into the market that don't know what they're doing. They're overpaying for stuff and then getting screwed. I mean, it sucks for them, but then it sucks for us because we're getting bid out on everything. But I mean, where we shine was just having good relationships with brokers that brought us the first look before they put it on the market, or occasionally still buying from the foreclosure auctions, and just, or from the probates, going to the courthouse and bidding on houses with cash, and just always finding like a unique and creative out of the box approach to buy real estate that other people are scared of doing.
Yeah, absolutely. I guess again, like you just said, it kind of comes down to, assessing the situation and just adjusting and finding a way.
Yeah, I also feel like people saying there's no deals and it's hard is also just kind of an excuse, you know? And yes, it is. I agree with them. Like, I definitely agree with them. But if you sit around and think, oh, it's hard, it's difficult, and I'm never going to find anything, you're never going to find anything. But if you actually think you're going to find something and you do the work every day, even though it's grueling because you don't see the outcome right away, but like 2, 3, 4, 5 months later, when that slam dunk deal falls on your lap because you've been following up with that one broker every month over and over again till it gets to that point, then it pays off. And then you realize that all this is worth it.
Yeah, no, you touched on an interesting point there. That's kind of the mindset aspect, right? You're kind of you find what you look for, right?
Yeah. Yeah, and I mean, you have to be based in reality too. You can't just like completely go off the deep end, like, oh, I'm gonna buy the best deal in the world. Like, you got to be somewhat realistic too. So it's a balance, I would say.
Yeah, of course. I like that, finding that balance between, your inflated optimism versus, being pessimistic, right?
Yeah, yeah, exactly.
Yeah, absolutely. So, you transition from the flips, and then from flips, I know you mentioned doing townhomes or some sort of development. Like, how did you get into that?
Yeah, that's what we were talking about earlier, the small lot subdivision project. Honestly, we're we were driving down the street by my office, and I saw a for sale sign on a piece of property by our office, and I called the sign, and the guy that owned it lived like down the street in some apartment that he owned in some like dingy little unit that was like barely lit. And we walked in and he wanted some ridiculously low price, and on like a one-page little contract that we just wrote up, we signed a contract and opened escrow for 250,000. That property at that time was probably worth over $1 million, just raw land as it is. So we knew no matter what, nothing, basically nothing could go wrong with that deal. And then the other project like that was like a probate auction. And then there's you have to know like the zoning and the different rules and everything. So having a good architect and an expediter and everyone that could help you figure out what exactly you have there before you actually put money on the table is extremely important, because you could buy a piece of land that you could do nothing with and then you just lost money.
Yeah, absolutely. You brought up a great point there, is kind of getting a good team around you, getting a good architect. Maybe you're new to the industry, maybe you're new to a new state or a new market. How are you able to connect with those good people?
Calling a lot of different people and having lots of conversations and feeling out who actually seems to know what they're talking about, and then meeting them in person and seeing what they've actually done. Because a lot of people could talk the talk, but can they walk the walk too? And you have to walk the properties that they manage or that they own, or the projects that they've worked on, if it's an architect or engineer or whatever, and referrals to talking to people they've done business with before, and see what they have to say about them.
Yeah, no, that makes a lot of sense. Just kind of doing your due diligence,
Yep.
not only on the services they're providing, but like them as a person, as a
Yeah.
professional.
Yeah, and I like to deal with people that I can get along with too, because if you're having a long-term relationship with them, it's more enjoyable if you could actually have a beer with them and hang out and all that kind of stuff, because it makes it a lot more fun that way.
Yeah, yeah, absolutely. You definitely want to, try to get along with along with people, especially if you're in it for the long term and, there's something there.
Yeah. I mean, granted, at the end of the day, when it comes to business, you got to deal with a lot of people you'd rather not deal with, but that's just part of it as well.
Yeah, yeah, absolutely. No,
Like difficult sellers.
difficult sell. Yeah, I'm curious as well. I mean, let's say, if you could just kind of run through it briefly. I mean, let's say you have your eye on a property. What exactly is a difficult seller? What would they make difficult, and how would you, try to help them?
Um, just they don't budge on, I mean, price is one thing, obviously, but budge on certain terms like length of escrow, financing, uh, different little particulars of the contract that maybe don't make a big difference to them, but they make a large difference to us. And also kind of giving them background and an explanation and where we're coming from and why we want that. And some can be agreeable, some are more stubborn. It's just, you kind of see it all, but every negotiation is different and every single one is challenging in its own way.
Yeah, yeah, absolutely. Are there any particular, terms that you find that sellers seem to like? Is there a sweet spot in terms of, how long escrow should be, or how do you go about that?
I mean, with apartment deals, due diligence, 30 to 45 days, maybe a financing contingency of like 60 days, and then close like on the 90th day. So like 30 days after that financing contingency seems to be kind of where we end up usually. Sometimes I'll have an extension after that point. It just kind of depends if it's like a larger value add, depending on the type of finances as well. On the last deal we did a bank loan that was really easy. We didn't have to do a bunch of reports, and we closed escrow in 67 days on that, which is for a larger commercial apartment deal is quite fast to do it in 2 months.
Yeah, yeah, absolutely. I know that those larger deals I'm sure would take much longer.
Yeah. Yeah. There's a lot more due diligence, a lot more reports, a lot more that you need to uncover. That just takes time.
Sure.
And we're also trapped because we're in LA and we're traveling to the Midwest. We have to factor in some travel time as well.
Okay. Yeah, no, I mean, you'd mentioned Oklahoma, you'd mentioned, I guess now you mentioned the Midwest. What
Yeah.
other markets are you kind of looking at right now?
So we're looking at Oklahoma City, like I said, Tulsa, because it's close by, a couple places in Northwest Arkansas, because it's right on the border with Oklahoma. Kansas City, the Kansas City has been overpriced now because a lot of California and New York people are there, and you're seeing 5 caps in Kansas City now. And then Albuquerque, we like as well because Netflix is pouring $2 billion into there and hiring thousands of people. And there's a few other big employers there, and we could fly there in an hour and a half. And then there's a few other markets that I have my eye on, but we haven't really dug into them. Those are the ones that we're focusing on at this time.
Yeah, absolutely. And I'm curious as well. I'm sure maybe someone's listening and it just kind of seems like, it would be difficult to be in one state and then have your hands on different deals in different markets. How are you able to kind of not spread yourself too thin and make sure that you have enough people to help assess those deals?
Yeah, I mean, it helps because my brother's my partner, so we're able to tackle most of the things that we need to do. And just having a really good third party partner that has like our partner in Oklahoma City has 1,000 units under management there. They're also owner operator. So we could share staff between properties, resources. They have a regional. I'm on a weekly call with them anyway to go over all our metrics and numbers and make sure the property is going in the right direction. But yeah, having the team is that much more important if you can't go there and deal with stuff. And having systems in place. I mean, granted, because we're still looking at deals there, we are trying to get out there pretty often. So we are able to go out there and walk the property. But the property we do have in Oklahoma City is mostly stabilized at this point. There's not a lot. it's not as challenging. It's more making sure the status quo, or we're finding ways to improve upon everything on a weekly basis. And there's always some little issue to deal with too, even on a weekly basis.
Yeah, yeah, absolutely, Jonathan. I guess, like anything, it's a matter of, assessing the situation and putting out those fires when they come, right?
Yeah, operations and asset management is very important and can make or break a deal, and people don't talk about that as much as they should.
Yeah, absolutely. I mean, is there anything that you think, people should specifically consider or talk about in that regard?
I think people don't. So we have a budget that I monitor on a monthly basis to make sure we're hitting our numbers, and I think that's really important to make sure you're hitting your return metrics and make sure the property is going in the right direction. And also, just because the total amount of the expenses where you are is you're hitting that number, but let's say like your utilities were a lot lower, but your maintenance was way higher. So it kind of evened it out. But like, why was that maintenance way higher? Did we have a lot more move outs? So we had a bunch of make readies. Did a pipe burst? I mean, like what's going on here, and digging into like the nitty gritty of not every expense, but some of the larger line items to better understand where it is or what could be done better to mitigate those things in the future.
Yeah, absolutely. That makes a lot of sense. And I'm curious as well. I think you may have briefly mentioned it earlier, but in terms of looking at a budget, I mean, is there a particular percentage you're looking at for a contingency when you're going into a project or assessing a deal?
Yeah, if it's a light value add, we want about 1,000 a unit in reserves, and we add to that on yearly basis as well. If it's a heavier value add, probably closer to 2,000 a door. But that just depends on what exactly is going on in the project, and we adjust that accordingly. But even with our expenses and all our costs in general, we try to have some kind of buffer there. And so that's our kind of conservative approach, and that's showing on the deal we just did. And we're right now beating our projections by 67%, which is incredible. So we're crushing it there.
Yeah, congrats on that. That sounds
Yeah.
great.
Yeah.
Yeah, no, I'm curious as well. I mean, you use the words light and heavy rehab. I mean, what's kind of the threshold there? Like, what would exactly mean? Like, what would a light rehab be compared to a really heavy rehab?
A light rehab on this deal we just did. We did some gutter work, drainage, minor drainage stuff. We just gave the outside, we like the condensers outside, we put like covers to make it look better, touched up all the paint and walkways, concrete on the outside, changed the name and the signage and some of the branding stuff. But we haven't touched the interior of the property other than turns, and we're actually adding one unit though in an old pool room, because there used to be a pool on the property that had a pool room with a sauna. So we're changing that space into a studio unit. So that's probably the biggest part of the project, and we're about to be done with that. Um, but but yeah, so I would consider that a light value add. A heavy value add would be getting in and redoing the interior of all the units and possibly some systems, roof, electrical, plumbing. That to me would be a heavy value add. And then there's probably some kind of hybrid in between those two as well. Like
Yeah,
maybe you're not maybe you're only rehabbing half of them, so it's like a medium rehab, maybe value add, something like that. You know?
okay. Yeah, no, totally understood. Yeah, I just thought I'd ask about, kind of light versus heavy rehab and maybe costs incurred.
Yeah, it's probably anywhere instead of like 2K a door, you're talking five or more a door, something like
Yeah,
that.
yeah, yeah, absolutely. So I know you touched on, you being in LA, you looking at different markets like Albuquerque, OKC, Kansas City, wherever it may be. Is there a particular unit count that you're looking for, or an asset type, or what's kind of your, poster child of a deal?
So the last deal that we did was an operational efficiencies thing. The management was just running it into the ground basically based on expenses. So we reduce expenses now by, I think it's closer to about 30%, which is huge. It's over 100,000 in the first year alone. So we like those deals where we can come in, give it our touch, operate it better, reduce expenses, do a little better job on marketing, feed off maybe other properties that the manager has in the area where we have leasing efforts, staffing efforts that can be combined. But our sweet spot would be 3 to 10 million, 50 plus units, enough units to support at least some kind of staff on the property. And then some kind of small rent bump and expense reduction, at least 20% improvement upon the property to make it make sense. It might be closer to 25, 30, but at least 20% before we really start to look at a property seriously. And something where we basically that allows us to improve it enough that we could refi in year 3, 4, and 5, return most of the money to the investors, hold longer term from there. And then they could use that excess capital to invest in future deals with us as well.
Yeah, yeah, absolutely. So it kind of seems it's interesting, kind of how you talked about the flips, you talked about the new construction, the developments, and it's almost like you're kind of taking those lessons learned from back then and kind of using them, but in a different way now.
Yeah, kind of did a 180, but definitely learned from I don't want to flip anymore. So if we can never sell, that'd be great. And I don't really want to build because I mean, granted, LA is just probably one of the toughest markets in the country to build in, especially we were doing infill like in the heart of the city, which is on slopes a lot of times. So that's basically we were doing the most difficult thing to develop in probably the country. So I don't mind building, but if we're buying an existing asset that maybe has some extra land or maybe it had some buildings that burnt down in the past that never got rebuilt and has some opportunities for us to build. So we do have some experience with that we can implement it with something that's already bringing us income.
Yeah, yeah, absolutely, Jonathan. And you mentioned something earlier, about getting your investors' returns, when they invest into your properties, right? So could you kind of explain, does that involve, raising capital, or, how does that work?
Yeah, so on our deals, we are investing. We've been selling some properties in LA to invest in deals in the Midwest. But obviously that we don't have unlimited funds as well. So we have been, the last deal was just friends, been reaching out to more people outside in the public to raise funds for our future deals. But yeah, basically we put a deal under contract, we put the deposit, we pay for all the due diligence stuff. If it looks like it's something that could work, then we'll put a presentation together, do a webinar, and then raise money from others. And so we usually split the ownership 80-20 or 70-30 depending on the deal, and basically the 20-30% is our sweat equity. So it's what we get paid to put all this together and figure all that out. If we are an investor in the deal, we take part on the other end as well. So we would take part of that 70% depending on how much funds we actually invest in the deal. But we're trying to hit like a 8 to 10% cash on cash for our investors on conservative metrics. So hopefully we could do much better than that. But that's kind of in line with what's out there and better and in less risky, more stabilized assets. Because the last deal we bought was at 97% occupancy, which is actually a little bit down now, but because we have had to evict some bad elements, which in the long run will end up being better for us. And because we raise rents a little bit on renewals and all that, so some people leave because of that, but not a whole lot. So it's just kind of part of the business plan at the first 6 months, I would say. You kind of have a little bit of dip in occupancy as you're making changes.
Yeah, absolutely. So I would imagine, when you're adjusting for that dip in the occupancy, when you're making changes, whether it be increasing rent or whatever it may be, do you have a contingency or reserves for that as well, or how does that work?
Yeah, so the first year we always have a higher vacancy to take that into account, higher expenses, because like, for example, in the last deal, the seller basically didn't do any work orders for a few months. So we had to take care of a lot of things day one.
Yeah, yeah, absolutely, Jonathan. I guess like anything else, matter of doing your homework, right?
Yeah, yeah, and we do an professional inspection on all our properties. At least have that inspector walk a third of the properties. We have a really good, intimate feel for what's going on in the property, and we know what we're getting ourselves into and what things we need, what money we may need to keep aside for future needs.
Yeah, yeah, absolutely. So, I'm just curious as well, what's next for Jonathan in 2021? What are you looking forward to? Maybe someone's listening, or you're looking to collaborate on a deal, or what are you looking to do?
Yeah, we're looking definitely for more deals. Our goal is to do 4 in 2021, by the end of 2021. And also feel like we could find one more good market where we could have a little more consistent deal flow that's maybe super under the radar. So that's what I'm working on, looking at different data points out there to locate some property that is under the radar, undiscovered, but doing well economically, where, we could have a strong impact on. So that's what I'm working on with different data providers and different means, and people helping me discover that information.
Yeah, absolutely, Jonathan. Well, is there anything else you haven't said that you really just like to hit home?
Um, yeah, I like to always say, think outside the box. Just because something doesn't work, you got to keep on seeing what other options might be available. Like if a deal doesn't work, is there maybe some other lending option that you don't even know about that you could discover that could help you um, make the deal work? Or for example, in this last deal, the deal already worked, but we found a space to add a unit, and that made a huge difference. It basically brought another 2 points of return to us and our investors just by $650 more a month in rent through that addition of that unit. So finding little creative approaches like that where you can add units, or maybe you have only 1 bedrooms, but they're all big 1 bedrooms, so you could turn some of them into 2 bedrooms and get a significant rent bump just by doing that. And it's not hard to do that if there's enough space and the layout's there, and you don't have to, if you have to start doing structural things, that gets challenging. But if it's not structural stuff, then it's not too difficult. And yeah, this is a long, patient, at times grueling, at times not very fun business, but if you keep at it, it can be very rewarding, and it can give you freedom in the life that you really want to live and control. And then one last thing I would say too is also know what like your goals are. For me, there's some people that want to shoot for the moon and create like $1 billion in assets, and that's not me. I just want to do my 2, 3, 4 deals a year and just kind of chug along and live a pretty damn good life and hit certain cash flow goals that I have. And I live a pretty simple life and don't need to own a jet or have a Ferrari or anything crazy like that. And knowing that about yourself, I think, is pretty important as well.
Yeah, I like that. That's kind of the self-awareness and kind of knowing what you wanted and kind of executing on your plan.
Yeah, and happiness.
Yeah, I like that, Jonathan. Well, maybe someone's listening, maybe they're in LA, maybe they're in one of the markets you mentioned earlier, whether it's Oklahoma, Albuquerque, the Midwest, wherever, where can
Yeah.
we find you?
I'm actually active on Twitter, so just at JB2 Investments, or you could email me jb@jb2investments.com, or just visit my website, jb2investments.com.
Yeah, absolutely, Jonathan. Well, thank you so much
Yeah.
for coming on the show. I've learned a lot, not only about you, your background, your business, and multifamily. So it's been a real pleasure.
Thank you. Appreciate your time as well.
Talk soon.
All right.